Welcome back to Top Stocks. In this video I am going to talk about Stripe. Stripe is a company that is about to go public, and in my opinion it is the most intriguing and probably the biggest IPO of 2021. A lot of interesting companies have an IPO in the upcoming months, such as Roblox, Coinbase, Instacart or Nextdoor. But Stripe is the only one I am strongly considering buying shares at this moment. In this video I am going to talk about the business model of Stripe and why I do believe Stripe is a good investment, if the price is right. Right now it is not 100% certain that Stripe will go public, but a lot of rumors surfaced in the past months and it just seems to be a matter of time now until it is official. So let's start with a quick look at the history of the company. Stripe was founded in 2009 by the Irish brothers John and Patrick Collison. Stripe wanted to facilitate payment transactions online. Their main product is a software which can easily be integrated into a website or an app and takes care of money transactions. At a very early stage the brothers were able to get funding from well-known Silicon Valley investors and startup accumulators such as Y Combinator or Peter Thiel. In 2011 the software of Stripe was rolled out and offered to customers in the software as a service business model. The customer base of the company grew very fast in the following months, and the brothers were also able to find substantial additional investors and raised a lot of capital. The last founding round valued the company around $35 billion, and that was already a year ago. The company grew a lot since then and is now valued around $70 billion. Back to the business model of Stripe. The Collinson brothers noticed that online businesses often were struggling with processing and collecting payment, since they did not have the resources and the infrastructure a big company would have. While the brothers were studying at Harvard and the MIT, some of their classmates who founded startups were complaining that they lose a lot of time dealing with payment routing, currencies and reports. The founders rather wanted to invest in developing their products and services. So they decided to drop out of school to develop their payment acceptance software full-time in 2009. At a very early stage the brothers found out that they potentially could solve a huge problem in the e-commerce field. The software would allow businesses to collect payments immediately. But Stripe is more than just a software to facilitate the acceptance of payments. Stripe also developed Radar, a credit card fraud detection service, which uses machine learning to improve and already decreases credit card fraud by 25%. Later the company also launched Atlas, which is an end-to-end business formation service. Atlas makes it very easy to found a new company. They also launched Issuing, which is a white-label credit card solution, allowing companies to issue customer credit cards. The marketplace of online payments is of course very competitive at the moment. Competitors such as PayPal, Square or Apple Pay are fighting for the biggest market share. But I personally believe that it is not a winner-takes-it-all market, and that there is room for more than one online payment service. Stripe is also not a startup anymore. They have huge customers such as Amazon, Lyft and Facebook, which means the company is in a prime position to profit from the expected growth of online transactions. The company also showed with their Atlas application, for example, that they are innovative even outside the payment industry. I strongly believe that Stripe already works on the next big thing. So now let's talk about evaluation. It is estimated that Stripe will be worth approximately $70 billion at the IPO, and if that is the case, I would definitely buy shares of Stripe. This valuation already is quite high, but given the already big market share with customers such as Amazon and the growing market, I definitely see potential at $70 billion. The problem is that IPOs are a little bit overhyped at the moment for my liking. For example, C3I doubled the price within the first hour of trading. To sum up, I will definitely observe where trading starts at the day of the IPO, but I am not buying the share if the price is not right. If the stock price rises more than 30%, I won't buy it and wait until they release their first earning reports, which would allow me to evaluate the company in more detail. I like that the company is already established and operates in a growing market. I think that the company is innovative and eventually will come up with new innovations, also outside of the payment sector. So I see a lot of growth potential for Stripe and definitely hope that the company will soon go public. So I hope you liked this video. Please leave a like and subscribe to my channel. Also let me know down in the comments which IPO you are looking forward to the most in 2021. I will probably make an update video once the IPO is official and once we know more about the numbers. If you enjoyed this video, you might enjoy the video I did about C3 AI a couple of weeks ago.